Hopefully you're having a great day today. In this video, we're going to be going over the trades we made in the semiconductor market and how we ended up selling Big Bear AI for a profit at market open. So this morning, we got up at our market open live session that we have each morning inside of StockMate. And we noticed this was our entry on Big Bear right here around $2.74. And right at market open this morning, we sold Big Bear AI right around here. And we were anticipating the market to, as it was starting off quite green, to sell off. And some people say, Will, how come Big Bear AI spiked to $4.04 right in pre-market? Well, it's nothing other than some accumulation by the large institutions that invest in Big Bear AI. So you guys might or might not be familiar, but if we just take a look at this company, it's an AI company I'm quite heavily covering here on the channel. In most cases, if you guys want to stay up to date with AI and quantum, just make sure to subscribe. But take a look at some of the institutions that hold this company. You got BlackRock, okay, holding what seems to be 100 million, is that right? Or 290 million. You got Vanguard, you have State Street, Morgan Stanley, you got Charles Schwab and Goldman Sachs, Citadel, Citibank. So the reason is because you have some price driving up. We've seen this right here, but we've also marked these levels out. These aren't new support and resistance levels that we are just now looking at. These are levels that we've had marked out for quite some time. And we were saying, hey, this run here could happen. We capitalized on it, had a buy price right here, surged, ended up selling right up here this morning at market open at that resistance, and now it's selling back down. So let's take a look. So hyper bull case with Big Bear. And just for a friendly reminder, how this trade ended up, we ended up selling right up there and then buying the inverse of the semiconductor market, SOXS, and that stock has still gone up. We're up today. Our portfolio is holding right around zero. Maybe it's positive, maybe it's negative, but it is holding at zero as some of the other stocks took a dip later on, like Nvidia and Microsoft. So that's the update. Again, we bought the inverse, so expecting semiconductors to sell off a little bit more in the coming day, which they did. We made some profits there, but some of our other positions sold off. So especially CTM, you see it's down about 2% there to start the day. That's one that we're going to watch. And now we're in SOXS. It's just $25 profit right now. So we'll be seeing $26. We'll see how that goes. But anyway, Big Bear AI has a few levels that could indicate some momentum, but also right here, you got this previous resistance that's pretty strong right here. Previous support, previous resistance. There's been some consolidation around this range. Most of the time, just, take this right here. Most of the time, when it's gotten rejected by this resistance, it's then sold down to this level, consolidated, and then sold down. And then again, it hits the resistance, sells down, consolidates, and then continues to sell off. And now recently, we saw it hit this resistance up here. It's sold down, starting to push up. And the difference here is that this was a much stronger move than the other moves. The other moves, when we were looking at them in the past, this is just for reference, really the last month. We're not going back too far, although Big Bear AI, if you go back a couple months, take a look. We're not going to do that. But again, from really $1 a share, we started covering it back here in November or late October. $1 a share up to $10.50 before selling down. So now we start to see this move. So again, with this recent move here, in the past, it's gotten rejected, it's sold down, but this is a pretty strong swing that we've seen it surge about 50% really in the past week. Okay, so is it possible that it gets rejected and continues down, well, mostly like the rest of the movements that we've seen in the past? Yes, it is possible. But it's also possible that it finds support here on this level at around $3.45 and spends some time here in this range and then continues up. And this previous resistance that we've mapped out time and time again right here, it could act as a support. So it's possible we see it shoot up here to 375 and act as a support, that previous resistance. So we have a new level to start making a recovery for Big Bear AI. So if that recovery were to take place from there, it would be about a 170% increase from that price. If we do see a sell down, maybe we see a sell down to here. It's possible. Start to see it not hold. We'll just have to get in with a trade probably tomorrow or the next day, depending on how things move at market open. I'm expecting a little bit of red tomorrow, but we'll see how it goes. And then you come down here, this recovery would be 45% recovery. So we'll see if that happens again, if it gets down to that level. But essentially, Big Bear AI, very volatile right now, but also for good reason. They have some good contracts. They have their tech being used. I recently have been seeing their tech being used quite often at the airports. They are scanning your face. Some of you guys might have had your face scanned by Big Bear. And the last thing to consider as we're looking at Big Bear here is to consider some of the earnings this week. We have big tech earnings this week. Let's see. And just to keep in mind what tech stocks, okay, so they have some tech stocks this week, and they say estimates might be too high, which could drive prices down. But just take a look. You have Apple, okay, we had Tesla last week, and they had their worst quarter in years. But then you got Alphabet, okay, you have, and they did well. They offered little future guidance, but they did beat earnings. And then you have this week Apple and Amazon, as well as Apple, Amazon, and Meta, okay, and Microsoft and Coca-Cola. So really and Chevron. So some good big indicators for the world to see, as well as the inflation gauge, which we'll be getting here on Wednesday. So we'll take a look on Wednesday, the Fed meeting for personal consumer expenditures. See the impact of tariffs on the general public's core business, especially looking to see how, for example, Apple is impacted by some of these tariffs on China. We could see potentially Apple being hit more, but maybe it's not reflective, or that we don't see it show up in this quarter or show up at all. We'll just have to see, because they also are building a lot of factories in the U.S. They got one in Michigan, one in Austin, one in California, one in Wyoming, and Texas over there. So Apple is definitely, and I think I said that, Austin, but Apple is definitely building manufacturing in the U.S., but definitely we'll see maybe some net profit margin shrinkages potentially as a result of that. But we'll just have to see what happens there. So as you can see, Big Bear AI is up there. And again, if the market has some really good earnings this week, maybe we see this continuation. The recovery up there would be about 200%. But if we see some bad earnings from some of those big tech, maybe drag some market down a little bit, it could sell off, maybe even down to this 250 range once again. That's a very conservative approach with Big Bear. I don't know that it'll sell all the way down there, but that is very conservative. I don't know that. But what I would say is Big Bear AI in its current move is looking quite bullish. This could be a pullback for something that could be a continuation. And we're still expecting a little bit of red in the markets regardless. So maybe it pushes through, maybe it's affected. We'll see. The reason I'm expecting a little bit of red, personally, I see semiconductors being hit because a lot of the exports and really imports were coming from China. So with those tariffs, you're going to see that impact. That's why we're in this SOXS position today when we sold BBAI. And it's up $30 profit. It's a small position of about $2,500. It's up about 1.43% today. And we'll see if it holds. But I would imagine maybe that trade could be a 5, 10, 20% trade over the next day and a half if we start to see semiconductors get hit, as it does fluctuate 3 times as much as the normal market. So it's a 3x inverse of the semiconductor market. So it is a little more risky, and I don't encourage beginners to trade it, but it's one that we got into our live sessions this morning in Stockmate. If you guys ever want to watch me trade live, I would invite you. It's the second link in the description. Got a huge sale there Would love to have you there. If I earned your guys' thumbs up, hit that like button. Do consider subscribing, and I'll see you guys in the next video. Take care.